Good morning, Dr. Ralph. Thank you for joining us at Inside Telecom today. We're going to be talking about FinRadar and how it started, the financial data, and the problems it's trying to solve, and how the platform is evolving for investors, institutions, and AI agents. Um, to start with, you've been you've spent around 15 years working in financial markets and trading environments. Before FinRadar existed, what was the recurring problem on your own desk that made you think that you had to go for this better way?
Um, First off, hi Noor, and you can call me Ralph throughout. Don't worry. Um, I remember exactly the day when the whole friction started with my experience with financial markets. To begin with, I'm a doctor, and I started my career on the financial side as a hobby. I was really passionate about the market, and I remember the day when I was going back from home, looking at my portfolio, and I realized there was a major problem. I had two stocks. That was in 2012, I think in December. I had two stocks, one that crashed like 50%, another that crashed about 80%, all on the same day and after hours. And I realized at the time that something needed to change in what I was doing. I thought I had an edge being in biotech and being a doctor, but this is the most fearless field of all, biotech. It's uh, Everything can live or die on a date, literally. So one date, an FDA decision can crash your portfolio. So at the time, I thought I got the story right. I thought that I was getting the story from the company and that I was comfortable with what they were selling. But I realized that was not enough, and I needed to do a much better due diligence. I mean, my portfolio needed a doctor at the time for sure. And that's when I started looking at some of the key data that were of value and that might impact my trading experience at the time. So things like an insider activity inside a company, pick any stock, are the insiders, the CEO, the CFO, are they buying the stock? Are they dumping shares? Do we have an ATM program? What we call an ATM is add the money, dumping shares literally by the banks while you're trying to make a position in a company, in a stock. What was the cash runway of that stock? Do they have enough cash to last for a while or not? Or are they going to dilute you over time? What about the hedge funds? Are they interested? Are they in the stock? Are they not? Are they getting out, getting in? What did the chart look like? What was the technical part of the picture? What are the fundamentals? What is the sector in itself? And what does it tell us about the biotech sector, for example? I don't know if you remember after COVID in the past few years, the biotech had a massive drawdown, and it still hasn't recovered until today. And if you just decided to buy biotech stocks during that time, even the best of breed would have been crushed. So you didn't want to do that. And that's how I started building my own tools and my own database. And it started with a biotech project. And the same folder I used many years ago is still called biotech on my screen. And things evolved, and I started building code, and I did my master's in finance as well many years ago. And then I started building everything I could put my hand on to enhance my skills and my chances of succeeding in the market. That was pretty much it. Everything was born on that December 2012. I didn't know it at the time, but now I realize that was probably the biggest impact throughout my career.
So there are many questions in your head, but what is exactly that you wanted to structure and to deliver to people that had similar questions on their mind?
Uh, Well, the main problem I had um, was at the time, and for every trader, probably they are asking the same question: Where do I get the data from? Where do I get started? And if you look at the market today, there are two paths where you can get your data from. There are some raw data that you can get through the net, including the SEC website, for example. It will throw a lot of documents at you. And there are the fancy parts of the market, like Bloomberg, like Definitive, like FactSet, and they would charge you a huge amount of money for that. You'd pay $30,000 a year or so for a license for a seat with Bloomberg. But You cannot afford that when you're starting as a new individual investing in the markets, or if you're an advisor wanting to do some work, some research, or if you are a research firm, you need to be nimble and you want to save some money. So that was not the ideal target for me at the time, at least. I saw that as a no-no, a no-go. And then I looked at the other part where the middle range, you had some tools in the market and they would provide some decent information. Every tool would be specialized in one area of the market. You'd have some area doing fundamentals, another tool providing stock technical analysis, another one giving you another piece of the puzzle like insider trading or hedge fund data. But it was really hard to find one area of the market or one tool that would provide pretty much all of them in one shot. And that was to me uh, a bit of a problem because every time I was getting a membership with any of those, I would have to come back, get that data, restructure everything in one place where I can bundle all that data for any individual stock and where I don't have to go through 5 different websites to get that information.
You mentioned the SEC and how much it contains a volume of public disclosures, yet raw fillings remain difficult to operate. Was there a specific moment when you realized financial markets needed a dedicated data layer to transform raw filling into clean, computed, and intelligence ready for decisions?
Yes. So from that time, in 2012, I realized I needed to dig deeper, and to get some of that deep knowledge, I needed to go through SEC filings. And those are not your best documents to look at. I mean, they are legal documents pretty much, and they have a lot of noise in them. They have a lot of individual characters, A and C and B, and you have to go figure out what each letter means. So you have to go through them and understand them in detail if you wanted to get some valuable data out of them. Fund data that can show up. Sometimes you'll be listening to CNBC, for example, and you see a fund bought 10% of a company, and you might jump on that as a trade, and then you realize it was really a trade that took place like 4.5 months ago. So there are different types of filings with the SEC for a fund. One of them is the 13D, which is an activist taking a big chunk of a company, 5% at least. And then you have the 13G, and that has multiple layers inside of it as well. Some of them, like the 13D filers, for example, they have to file within a week. So if you bought a 5% stake in a company, you just have to go and file within a week. And that's very valuable information. It's pretty speedy. However, if you're banking on a piece of news on a 13G filing that came from a qualified institution, so we call them, they don't have to file for like 4.5 months. Then you're literally trading an archaeological piece of data that is 4.5 months old, and that's not very helpful. And bundling things together between the two is not apple to apple comparison, so you cannot really bundle them together to see where money is flowing. You have to be very consistent with your time frames. So that is an example of what SEC can give you. And if you don't know how to look at it, you go wrong. Same thing happens with the amendments, for example. Like if you take, let's say a company has ownership in a stock, and then they come and announce an amendment to that position, and they say, now we have 7%. Well, does that mean that they have 7% from 3% before, or from 15 or 20 or 30%? We don't know. That filing just tells you 7%. It's your part to go dig deeper, get the previous filing, see what it was before, do the math, and then come up with the answer, and then decide on what you want to do with that piece of information, whether you're doing research, whether you're doing any trading or any long-term investing. You have to go through the details of each filing. Otherwise, you're really trading garbage. I'll add one more thing here. Actually, if you look at the bigger problem is when you start doing math on top of math. So if you're trying to aggregate, for example, I shared with you one example about one fund, but what we do at FinRadar is we combine 8,000 funds together, and we try to see if there is any valuable data from that. But you go and bundle 8,000 hedge funds together, and you realize that one piece of erroneous information will it will damage the whole second layer analytics. And that's why you don't want to be banking on a first layer that you don't understand. You don't want to build it right so that everything down the road becomes very informational. I do have some images as well on, as an example, like you can see CMPS chart, for example. This is a bundled chart of 8,000 hedge funds. So we look at all the funds that had a position in it, and you can see how in June of 2023 there was a major spike there in the share ownership of all hedge funds, and that was a mistake in one of the filings, or actually that at the time was a problem because the SEC changed the rules and you didn't have to mention anymore the numbers in thousands. You have to mention the full numbers.
Mhm.
So suddenly you have added 3 zeros to the number and you get that spike. If you don't have the right code, the right algos to spot those and fix them immediately, then you're just selling garbage. And that's actually the next slide is how we fix that. And now we don't see that layer anymore. So we added multiple layers of cleaning data so that the SEC data becomes useful to the end user.
At FinRadar, how do these complex signals translate um, to an insider's sentiment or as an institutional portfolio changes into actionable insights?
Yes. So when you look at the SEC data, you have to clean it, like we
Okay.
mentioned. Um, Take, for example, the insider trading. Those are what we call the Form 4 tradings for those who look at them. Most people don't probably, but what you can see from filers, if you're watching the feed that comes to you, that feed of information that is coming to you, sometimes you get like 10 filings within the same company in a minute. Like it feels like everyone is just running to the exits. I have an example here about the stock was EQPT. And if you look back in August, on August 18th, there are multiple lines of insider trades. I think there were five in there, or four. Each one of them, if you look at our page, has a +6 next to the filing itself, or +5 or so. That tells you that the same filing showed up 5 different times. If you don't clean that, you're just showing your investors that actually 5 people traded that same amount, and you're multiplying by 5, by 6, by 10 that same trade. And when you're adding things together as a second layer, then that error becomes much, much bigger as you compile things together. So cleaning that first layer will help you definitely build a complex signal down the road. The same applies in the insider forms. For example, if you're trying to look at what type of information you're providing to your end users, same example, an insider trade can be made for multiple reasons. So, for example, a CEO might sell shares. They might do it for different reasons. They might be doing it according to a plan. That's called a 10b5-1 plan, where like 3 years ago, he decided every month he's going to sell 1,000 shares. Well, that's not really an insightful information. It's not considered a discretionary piece of information on which you can act. Another one could be selling shares just to pay for the taxes. So he has taxes to pay on his shares. Instead of paying it through cash, he would just sell some shares to cover for that. And that's called sell to cover. Another type of sales could be a cashless sale where you convert an option that you have to sell it. So that conversion in itself is not as important as the CEO waking up one day and deciding, "Hey, I'm gonna sell 2 million shares in the market. I'm getting out here." So if you don't remove that noise from your signals, you're really having such a dirty, if I may say, signal that you cannot really act on. It will pollute your trading, your experience, your analysis, and your alpha trading engines down the road. So those are a few examples about the insider trade and how we use them to build a clean analytical layer down the road. I'm showing you here Boston Scientific, for example. You look at the action and you can isolate what is called discretionary buying. So just by identifying the pure purchase that are discretionary by excluding the bad trades, you can see who bought within the company. And if multiple people bought at the same time, well, that's even a better indicator that something is about to change in the company. So you can look at that, and that's the first layer of complexity that we generate. But then you can look at the bundle of things. So instead of looking at the insiders alone, you can look at the time frame and you can see when that started to change, like I'm showing you in the next picture. And you can see that actually people were selling up till maybe around August 2025, and then things went quiet, and then the shift happened where insiders started buying. So looking at layer through time gives you value as well. And then you build on top of it by looking at another part of the market that is very valuable, and that's the fund data. What are funds doing with BSX? Another level one of complexity is understanding what funds are doing, and that's my next image. You can see how BSX, for example, had BlackRock, Vanguard, State Street. So you can see all these funds investing in the name. And you can see every quarter who added, who removed their shares, and how much they changed their positions. And that is still basic to me. That just tells you one fund did so and so. But you can build your own basket of funds. Let's say your favorite funds are 10 of your best funds. You can organize them in a basket. And then clicking on that basket click in that image, you can purely focus on those that matter to you most instead of looking at all the noise. And if you want to look at the whole picture, that's when you start going to the next layer. And that's when you build the aggregation of hedge funds together. Same thing happens with the 13D and the 13G filings. We do compute every one of them. We do analyze the changes, the deltas, as I'm showing you in the next picture. So you can see in the beneficial ownership tool, you can select any stock and it will show you all the 13D and G filings, which are the 5% at least positions that a company decided, a fund decided to invest in a company. And then you can bundle that, add that to your whole picture by looking at the insiders, the 13F filings that I showed you earlier, and then this one, the 13D and G filings. And this is still basic again. And the next layer, as I show you here in that BSX historical fund trades picture, that's when it becomes interesting. This is when you look at 8,000 funds together. What did they do together with that stock? Are they all in all buying or selling? And when did they start buying again? So we have all that data, and it's a call to the API. It's one call and you get that data. So you don't have to go dig deep or ask for major research in the market or ask Claude Code to do that whole homework for you. It will fail anyway. It cannot do that for you. We aggregate in multiple ways, and this is just one of them. I'm showing you here in the next slide how we've aggregated, for example, using that same tool. We built another analytical layer on top, and we actually looked at all insider trades by sector, by industry. So to do that, you have to have every step of the way, every agent, every API has to do a perfect job with no errors, so that when you're compiling, you're not adding any noise, you're not contaminating your samples when you get to that third layer, when you're looking at the macro picture and the major fund flows across sectors and industries.
Um, like a general purpose for large language models is to parse text, but on your platform, what makes it different than other large language models that usually struggle with financial content? And why do general purpose LLMs fall short without a normalized and a computed data layer? And how does FinRadar prevent this AI agent from doing mistakes that fall into the market activity?
Okay, let's start with problem one, and the problem with the general purpose LLMs. You've used ChatGPT, right? Or
Definitely.
Claude. I'm not sure what you use, but let's take an example here. Try this at home, and I think you won't be happy, but you can go ahead and try. Ask Claude Code or ask ChatGPT. Go ahead and give me all the trades, all the insider trades that happened within Apple stock for the past year. it will go, it will start digging, it will start looking for stuff, it will start browsing the net, it will start to go to the SEC, or it'll get blocked probably because it's not allowed to. And then as gather pieces of information from here, from there, from an article, and from a piece of news that it captured, it will throw at you a beautiful plot with some colors and some bells and whistles and tell you, here you go, confidently so. But if you look at the quality of the data it provided, it really has no signal in it whatsoever. It doesn't have the 10b5-1 I mentioned earlier. It doesn't tell you which ones are discretionary, which ones are not. It doesn't tell you what was an option sale rather than a true CEO coming to sell. It doesn't classify all these so that you can make a decision out of them. It doesn't clean the numbers. If a CEO filed that he sold 10 billion instead of 10 million by mistake by adding three zeros or removing three zeros, AI will not find it for you unless you build what we have at FinRadar to capture those errors, and that we provide that tool to you error-free, or to the most part error-free. By doing that layer in the middle, we provide that service, that complexity that your AI agent cannot provide. Um, I'll go even further. We just gave an example of Apple, but I can tell you, hey, go ask your LLM to actually go and fetch all insider trades in the tech sector, every stock. So it has to go through first it has to identify the stocks in the sector, then it has to go dig deeper for every single trade in that sector in every stock. And you're talking about thousands and thousands of trades there. So it will not be able to, it will crash, or it will give you pretty much garbage data. So that's how having our layer in the middle provides that extra intelligence, and it'll actually save you a lot of money because it's just one call to an API and you have that information in front of you.
Um, Basically, when I was doing my research, um, I read that FinRadar was initially launched to give individual investors accessible institutional grade financial market intelligence, and a lot of like insights on what could help the investor trying to use the platform. But how are you increasingly positioning yourself as an infrastructure or um, with your quants and AI agents like on the market? And how and what is the deliberate pivot toward infrastructure for AI agents in financial institutions?
Well, I think this is a very interesting topic nowadays. You can see everyone using AI and everyone trying to build their own websites.
Mhm.
So we evolved from a need point of view. So when I started building the tools that I have today, I didn't have the business in mind initially. I built it out of necessity. So I built the raw layer at first. I needed to get that information, and then I had to clean it because I saw it was really useless without that extra layer on top to make it cleaner. And once I cleaned it, I started wanting to aggregate it. And once I had that initial layer cleaned up and ready, I wanted to start using it for my portfolio myself. I'm a trader myself. I have a portfolio to manage. So out of necessity, I built the front end. Then the website became available to me first because I was tired at literally running that code every morning. I mean, you might use Claude Code sometimes, and you know how at the end of the day they tell you, "Hey, I'm tired. Let's take a break for tonight. You did a good job. Kudos. Good night." Well, my laptop did not sleep. Every night it would run a lot of scripts, and it would gather a ton of information. And then I would wake up the next day waiting to see what that information was and try to build ideas on it and try to use it to provide alpha in the market in my own portfolio. But that part came out of me needing the product. And once I got to that point where, you know what, I'm not going to run that code every day, every morning, and sit and wait and correct a line of code every day, I moved to the website. So the APIs were built nicely and they are always being cleaned and improved. But then the website became the tool that saved me that extra layer of work every day where everything ran automatically and the data came to me automatically. So that was not really a progression where I had a business in mind. I was really doing it for me to answer my own questions. But then as I evolved and as the APIs developed, I started seeing the value of adding the AI agents to help support the layers that I already built. And that became a piece of cake in a way. But once you have the solid background, once you have the solid APIs built, building an LLM or a skill on top, I mean, an agent on top, or a CLI or an MCP, it took us a few days to have all those tools available to our end user because the APIs were there. And the APIs were built so that they can deliver in one query the layer that you were trying to get information from. That's how it progressed along the way. But I can see us moving more and more toward the API layer. More than a pivot, it's more of a you can't build your third layer without having built the first and second, and that's how we got to our AI agent layer.
So you sharing internal and industry benchmarks that are evaluating FinRadar's data and analytical infrastructure. Which benchmark proves that FinRadar is delivering true computed intelligence rather than simply retrieving and reformatting SEC filings? And what are the key metrics along with that, and what do they measure against?
Okay, so let's start with the simple thing. It's really not simple to get the SEC data in a computed format. The most exciting masterpiece I had on my screen is when I asked Codex, I'm showing you the screen, when I asked Codex to finally get me the balance sheet of Apple in an API agent. Because to get to that point, it was a nightmare, literally a nightmare. To understand, you'd have to be an accountant and you'd have to be a very skilled coder and you'd have to understand a very complex schema to be able to build the APIs that get you those financial metrics. You'd become almost like a Yahoo platform where you go and you search for a fundamental analysis and you get all your numbers right. So having that cracked was not an easy task at all. But it was just a start, like you said. I mean, having just reproducing the SEC data in an API is something. It does save you a lot of money because it's clean. It's very imitative to whatever any company produces on the other side in their financials. But once that is done, the hard part starts, and that's where vetting against the benchmarks starts looking interesting. I'll give you an example like Rocket Lab. It's a very common space stock tradable today. There was a time in 2025, in Q2 2025, where they had a split, not a split, actually a restructuring. So the company had a QSIP number. What we call QSIP is an identifier of that company. And what happened in Q2 is they restructured, so they had to acquire a new QSIP number. So if you look at hedge funds throughout, and you're trying to plot the performance of hedge fund, not performance, but the track record of what they hold in their portfolio, and you're specifically looking at Rocket Lab, you'd see that in that quarter, well, things disappeared. So no one owned the stock anymore because everyone who was filing or your data was showing the old QSIP number. You haven't adapted to the new QSIP number yet. The funds did the same thing. Many of them still reported the old number. Some of them started reporting the new number, but not many. And then when the next quarter came, everyone flipped to the new quarter. So your task in cleaning the data, and I'm showing here the two Rocket Lab charts before fixing the data and after. And you can see how not having clean data will disrupt the alpha you're trying to generate from that insight. And if you look at that table I'm sharing, you can see how in Q1 you had like 419 funds using the old QSIP number. And then in Q2, well, you have like 511 now flipping to the new QSIP number. But you have also 15 still using the old QSIP number. So you cannot ignore those 15. They made a mistake, but you need to add them together. So you need to make sure that on that quarter, you're bundling the 511 funds that announced shares in Rocket Lab with the new CUSIP, and you have to add it to those who have 15 funds that have the old CUSIP still mentioned. They still haven't gotten the memo. They're still filing the old way. So if you don't use those metrics, well, you're going to have garbage data again. And the same applies to stock splits. The same applies to, for example, Netflix. So the most interesting part about the most exciting part is to find on your tool or whatever AI agent you're using, query that AI agent, tell them, give me the balance sheet of Apple in a clean way in one API call, and you get it. I think that is really neat. It saves you a lot of tokens. It saves you a lot of hassle. And that is not a simple work to do. I think that is to me, it is a masterpiece. It was a nightmare at the beginning. But once we finally cracked the code and we were able to get that SEC data, especially on the financials metric, I think it became very interesting. I'm showing you here how I can query the through Codex. You could query the agent and tell me, hey, give me the as stated balance sheet of Apple in letter by letter, number by number. You're going to have the exact same reproduction. So to do that is not an easy task, but this is just the start. And really, if you're really trying to build an analytical layer on top, you're just scratching the surface. But you need all that to begin with. You need to standardize it, and then you can calculate all the metrics on top, all the ratios and all that. But you need that first layer to be done right, and we did it. And as we did, we started seeing the errors that were surfacing with the data we had. I'm showing you here the next image is Rocket Lab. And this is an interesting example, and it applies to so many stocks because as they evolve, sometimes their CUSIP numbers change. And the CUSIP number is just an identifier, like the ticker, like RKLB is the ticker for Rocket Lab. For the identifier, the CUSIP number is another way to identify it. So over time, if a company had a restructuring, it will have to change that CUSIP number. And if you don't follow that, if you don't have a succession map where you follow the progression of that company over time, then you are having a lot of breakdowns in the quality of your data. If you look at the first image, this is how the number of hedge funds involved with the previous CUSIP number collapsed, and how after we fix the data in the next image, you can see how that was restored. That's because we follow over time any changes in those identifiers. And if you look at the table, I can show you how in Q2 of 2025, pretty much every fund jumped to the new CUSIP, while in Q1 of 2025, pretty much everyone was using the old CUSIP. So every quarter, you had to actually take both into account. Some filers were wrong, but they still had data, and you don't want to dump that data. You have to keep that data. It's valuable information. Okay. So by capturing that phase, you'd realize that you're bundling things together every quarter. You're tracking every company through its progression so that you're not missing any fund, any piece of dollar that might skip if you're not doing your due diligence. In the next slide, I'm showing you Rocket Lab by how it's invested by ARKK. That's Cathie Wood's fund. And you can see how just by doing our own compute, there is no interruption in the shares owned by ARK throughout that time frame because we did our due diligence at fixing that error. Same thing happens with stock splits, for example. You have stocks reporting a stock split every now and then, and the number of shares would skyrocket suddenly, right? So if you owned one share of Netflix before November 2025, that became 10 shares after November 2025. So if I'm looking at all hedge funds and how much ownership they have in Netflix, all in all together, 8,000 funds, one dirty number will mess this up. And you can see at that chart how we actually normalized backwards. So not only we give you the right number of shares that are currently owned, but you don't see any major spike that happened in November where that pollution came in. And we also normalized the previous shares so everything looks as if these are today's shares of Netflix.
Mhm.
So you can compare apples to apples. Just a few examples of the errors we see and how we kind of fine tune them so that the final end product is clean from the uh, the errors that you find along the way with the SEC data.
Okay. Looking ahead, what are the leading engineering and product priorities for FinRadar's roadmap?
Well, things are changing very fast, and for those who are using AI a lot, they you can feel the pressure, you can feel the anxiety where we are heading. I mean, I wouldn't be surprised if maybe a year from now, or maybe 5 years from now, you'd have your own AI agent talking to my AI agent, interviewing them, and providing that data to the masses of machines trying to learn how to trade the market while we are at the beach doing something else. I don't know. So things are changing fast. And I think that the one area of the market that gives me a bit of a relief is that I own some valuable analytical data. Uh, Otherwise, if you just have the first layer, the raw data, it's available for free. If you're talking to people nowadays trying to use your services, they don't want to go and browse and dig through a ton of work just to get some uh, insight about what to do with a stock. They want that information fast and quick. And things are evolving to where you open your own Hostinger server account, and then, or Hostinger, I'm not sure how to say it, but you can do that quick now and just use your Hermes agent connected to your skill. We have one file that provides all that skills. Everything that is to be known about our APIs is in literally one index. And if you give it to Hermes right now, in 2 minutes, it will know what to do. It'll know what to get you to optimize your portfolio. So things are moving very fast, and the younger generation is adapting to that. They don't want to go through the hard route, and they want things provided to them easy and fast. They don't want to learn how to build a DCF. They just want the output. And that's, I think, the relief I have deep in my mind, that at least I have some piece of data that is solid. That's the picks and shovels I'm building that people don't want to build in the middle. So a robot wants the data quick. We provide that data without having you go through the layers of cleaning and construction you need to do so that you have a beautiful end product. And that's hopefully where the trend is heading. I think the API down the road will become the big chunk, while the front end will become more of the showroom for people to test things out.
Talking to you, I realized and I have a different perspective about the financial world right now and how much you're so passionate about it. But in the recent months, people that are not involved in it have a different perspective about it and are very much invested in it right now. And it's like on social media, it has become a trend. How does FinRadar um, grasp the attention of these people that are not from the financial world to make it become a direct destination for them?
Sure. Well, social media is very insightful, but it
Mhm.
doesn't mean that they will provide you intelligence. If you
Definitely.
follow the herd, you will get hurt. If you follow the herd blindly, you'll be the last one to buy and the first one to get hit very hard. When the smart people are exiting, you'll be the one going excited because everyone is excited. Was excited about gold when it was 5,400, and that was the wrong time to buy at the time.
Yeah.
Now it's a different ball game, but you get the point. So if you just follow the herd, you will get hurt. If you want intelligent data, you have to follow the smart money, and you need to track it, and you need to bundle it in analytical layers that talk to you before the market sees it. Um, and we do that, and we make it very simple to where one file will get your machine. If you're clueless about the market, just using that one file connected to your LLM, tell it, analyze my portfolio, tell me what to do. Trust me, it will be much more insightful than a lot of the data you read on um, any social media. Um, if you go to the homepage of FinRadar, when you are a premium user, you have this newsletter that comes to you daily, and it comes from like 176 probably endpoints we have by now. It does dig through every layer from the macroeconomy to the technical side of the sector, the industry, to your portfolio. And then it will analyze how exposed you are to risk, where risk is. You don't know probably any of that, but it's doing it in the back end for you. And then once it has bundled all these APIs that we have, it will tell you this is what you need to do. But you cannot construct that by just following the social media. Or you're going to have to collect everything in social media and finalize it and fine tune it and build some tool that does that work that FinRadar is. I remember the other day I was sitting in a coffee shop. I saw a guy looking at a chart on his screen. I said, "Are you a trader?" He said, "Yes. I'm learning. I'm very new to this, like you were saying right just now." I said, "Okay, what do you use?" He said, "I use Hermes." "Oh, how do you do it?" He said, "Well, I just opened an account with a server, and then I connected to Hermes. And there is a skill that gets you news." And I connected that to my Hermes, and then it's providing tools every day. I run it and gives me some insight of my portfolio. That's how I'm doing it. I said, "Okay, here you go. This is my tool. Test it out." And he just, in literally 5 minutes, he was connected. And he said, "Okay, I'm going to use it." The next morning, he told me, "You know what? I tested it and it looks really nice. I mean, it gave me a lot of insights about my portfolio. I was super exposed to tech and it really calculated in a second. It found out that CoreWeave was dumping a ton of shares lately. And I have a position in CoreWeave, and there are like $500 million dollars worth of sales in the stock lately." I mean, it gave you those insights where you really had to have so many APIs built in the back end so that you can get that. You don't need to understand finance, but just connecting to that tool today or having your AI read that tool will give you an insight, a lot of insights, and an edge, hopefully, in the markets.
Thank you so much. Honestly, this was so insightful.
Thank
Um,
you.
and it's so great talking to you, and it's so great seeing the passion that you have while you're giving the talk and while you're answering the questions. And I'm really excited for this. Thank you so much.
Thank you so Thank you so much, Noor, for your time, and thank you for the invite. I hope people would like to try FinRadar. FinRadar.ai is the website. If they'd like to try the API side, it's api.finradar.ai. Any feedback is welcome. We're adding a lot of tools, so hopefully it'll be exciting for you too.